Ethereum, I think, has more upside. And that's why we call it the biggest macro trade over the next 10, 15 years. So I think that there's maybe at least a 50% chance Ethereum's network value flips Bitcoin.
Bitcoin is the cryptocurrency, and we think it's going to be the biggest one by far, by far. It's focused on, it's a monetary system, rules-based. The rule is quantity theory of money. So 21 million units, that's where it's stopping, and we're at about 20 million units right now.
The debate over crypto's future often boils down to a single question: will Ethereum ever overtake Bitcoin? It's a question that has split some of the most respected voices in finance. In today's video, we present insightful arguments and analysis from two renowned analysts on the issue. On one side, Tom Lee, co-founder of Fundstrat Global Advisors, argues that Ethereum represents the biggest macro trade of the next 15 years. On the other hand, Cathie Wood, CEO of ARK Invest, remains steadfast in her belief that Bitcoin will always remain king of the digital asset class. Tom Lee's position on Bitcoin is unapologetically bullish. He has gone on record predicting Bitcoin could reach $200,000 by the end of this year and $1 million long term. Yet, even with those lofty expectations, he considers Ethereum the more powerful trade, citing Wall Street's push onto blockchain rails and the explosive potential of artificial intelligence layered onto Ethereum's ecosystem. Lee has even suggested there's a 50% chance Ethereum's network value flips Bitcoin in the coming years. But not everyone is convinced. Andrew Kang of Mechanism Capital recently published an article on X, bluntly titled, "Tom Lee's Ethereum Thesis is Retarded," where he dismantled what he sees as financial misinterpretations underpinning Lee's analysis. According to Kang, Ethereum's fundamentals don't justify the bold forecasts, especially when stablecoin adoption, institutional involvement, and technical signals are scrutinized more closely. Cathie Wood takes a very different approach. For her, Bitcoin isn't just another digital asset, it's the one true cryptocurrency. She stresses that Bitcoin is rules-based, built on the immutable quantity theory of money, with a hard cap of 21 million units. Wood sees it as a new global monetary system, a first-of-its-kind asset class, and the most secure blockchain in existence. While she acknowledges Ethereum's important role in powering DeFi, she's clear: Bitcoin's dominance is here to stay. If you're new here, make sure to hit the like button, subscribe, and turn on notifications. And before we dive deeper into Cathie Wood's arguments and Tom Lee's bold Ethereum case, let us know in the comments. Do you think Ethereum will ever flip Bitcoin? Your thoughts help shape these discussions, and we'd love to hear your take.
So we don't think there are going to be very many cryptocurrencies. In fact, there's cryptocurrencies and then crypto assets. Bitcoin owns the cryptocurrency space when it comes to pure crypto. And now we have stablecoins, which are cryptocurrencies as well. But they are tied to the dollar because they're collateralized primarily by treasury securities. So Bitcoin is the cryptocurrency, and we think it's going to be the biggest one by far, by far. Now, it's focused on, it's a monetary system, rules-based. The rule is quantity theory of money. So 21 million units, that's where it's stopping, and we're at about 20 million units right now. So that's quantity theory. Stablecoins are based, as I mentioned before, on the dollar, and if you can find a way to use those stablecoins, which you can, in the decentralized in DeFi, decentralized financial services, you can earn money. You can earn money from your stablecoins. Just this last week, Coinbase introduced a product allowing holders of USDC who do not get the interest payments, they're not allowed to by regulation, but they're allowed to lend to loan their USDC in the DeFi ecosystem, and they can earn, as of last week, 10.4%.
Let's touch on Bitcoin versus Ethereum, because we had Tom Lee on a few weeks ago, and
Yes.
he's a bull on Bitcoin, but he's
Yes.
even bigger bull on Ethereum. He thinks will surpass the size of Bitcoin. Why is he wrong on that? Why is Bitcoin always going to be bigger than Ethereum?
So Bitcoin serves three roles. And yes, and we would differ with
I know you
Tom.
get on very well with Tom.
And we do.
And
We
you
do.
buy Bitcoin.
Yes, yes. So the three roles, Bitcoin, as I mentioned, is the global monetary system, rules-based, quantity rule to be sure. And that alone is a very big idea. It is also a technology. So layer one, blockchain technology, never been hacked. The other blockchains cannot say that, right? And so that's why the monetary system is based on it. And it is the first of its kind in a new asset class. We wrote our first white paper on that in 2016. So a new asset class. So it's got three very important attributes to it. I do think that Ethereum is playing a very important role, and therefore Ether, the native currency, in the DeFi ecosystem. A lot of the fees are going to the layer twos. Robinhood, for example, announced that it was going to start its own layer two, like Coinbase has. It's called Base. They get a disproportionate amount of the fees. Now, the question is, are there going to be so many layer twos out there that they're going to start competing against one another and confer more importance to the layer one? That is a possibility, and that is why we're invested in Ether, and we do think it powers the DeFi world. But I think these competing interests are maybe something that Tom and I can debate a little bit.
What about, is there a long list of other cryptocurrencies that you believe in, or is it actually a handful only?
It's really only a handful so far.
Which are the other ones?
Well, of course, we've got Bitcoin. Now, in our public funds, these trades are public, so I can tell you our exposures are Bitcoin, Ether. We're finally able to get an acceptable, from a regulator's point of view, way to play Ether, and we chose Bitmine immersion. And in the and then Solana is the third one, and we can talk about that as well in terms of its role. That one is through, well, it's Brera Sports, and everybody thinks I or ARC just bought a bunch of sports teams, which we did not. This is the company into which Soulmate is a Solana treasury is being folded and supported by the UAE, Middle Eastern, and my mentor, our advisor, and my friend Art Laffer is on the board of that one. So that's been very interesting. So those are the big three. Hyperliquid is the new kid on the block, and we're waiting to see how that all plays out. It's exciting. It reminds me of Solana in the earlier days, and Solana has proven its worth and is there with the big boys. So those we think are, and then of course there are other services of like money market fund and Uniswap and a few like that, Jito, which is related to the Solana ecosystem. So we will play certain derivatives, but if you're talking about the big boys or girls, those are the big three right now.
Cathie Wood's framework is built around Bitcoin's unique attributes: scarcity, security, and neutrality. She describes it as simultaneously a monetary system, a breakthrough technology, and a new asset class, all rolled into one. Ethereum, in her view, is essential for DeFi and innovative in its own right, but it is also subject to competition from Layer 2s and rival chains. That's where Tom Lee steps back in, with a much different conclusion about where the real value will accrue. Here's a quick recap of his Ethereum thesis.
I'm still really bullish on Bitcoin. I think between now and year end, I think it's still possible to be 200,000, and longer term, 1 million for Bitcoin. Ethereum, I think, has more upside because and that's why we call it the biggest macro trade over the next 10, 15 years, because of both Wall Street building on the blockchain and AI as well. So you have like sort of two cohorts actually probably deciding that it's really additive, right? Remember, the financial system is half of the economy. And in the stock market, financials are trading at a lower valuation than tech. So I think financials can re-rate in that world. But Ethereum is sort of the network value beneficiary. So I think Ethereum between now and year end, let's say Bitcoin is 2x upside from here. I think Ethereum is more than 2x upside from here. But longer term, in the BitMine presentation, we pulled some work from Mosaics, and let's say it's 5-year view for Ethereum. It comes to around $60,000 per ETH. So a lot of upside in the next 5 years.
Didn't you say you wouldn't be surprised there's a 50-50 chance that Ethereum could flip Bitcoin as network value?
That's right. So I think that there's maybe at least a 50% chance Ethereum's network value flips Bitcoin.
Tom Lee's case for Ethereum rests on one of the boldest theses in crypto today. Through Fundstrat's research and his connection with BitMine, he has laid out a future where Ethereum becomes the backbone of global finance. BitMine itself, while holding Bitcoin, has structured much of its outlook around Ethereum's role in tokenization, DeFi, and AI-driven financial rails. Lee has predicted Bitcoin can climb to $1 million over the long term. But when it comes to transformational upside, he sees Ethereum as the bigger story. His team even projects Ethereum could reach $60,000 within the next 5 years, a figure that would imply trillions of dollars in network value. At the heart of his thesis are 5 core arguments. 1. Stablecoin and real-world asset adoption will drive Ethereum fees and revenue. 2. Ethereum functions as digital oil, the fuel powering blockchain economies. 3. Institutions will accumulate Ethereum to stake and secure the very networks they tokenize assets on. 4. Ethereum could eventually be valued like all financial infrastructure companies combined. And 5. Technical analysis supports an eventual breakout from its multi-year range. To Lee, Ethereum is not just a cryptocurrency, it's a once-in-a-generation macro trade. Andrew Kang, however, takes a very different view. In his article, he wrote bluntly, Tom Lee's Ethereum thesis is one of the most retarded combinations of financially illiterate arguments I've seen from a well-known analyst in a while. His critique is that Lee mistakes activity for value capture. On the point of stablecoin and tokenized asset adoption, Kang noted, since 2020, tokenized asset value and stablecoin transaction volumes have increased 100 to 1,000 times. But if you check the data, you'll find that daily Ethereum transaction fees are practically at the same level as 2020. Kang explained why. Ethereum upgrades have made transactions cheaper. Stablecoin and tokenized asset flows are migrating to other blockchains like Solana, Arbitrum, and Tempo. And most importantly, value locked doesn't necessarily translate to fees. As he put it, someone could tokenize a $100 million bond, and if it trades once every 2 years, how much fees does that generate for Ethereum? 10 cents? A single USDT would generate more fees. His conclusion was that Ethereum may not be the main beneficiary of tokenization at all. Most of the fees will be captured by other blockchains with stronger business development teams. He was equally dismissive of the digital oil comparison, writing, "Oil is a commodity. Real oil prices adjusted for inflation have been trading in the same range for over a century with periodic spikes that revert. I agree with Tom that Ethereum could be viewed as a commodity, but that's not bullish. Not sure what Tom's trying to do here. In other words, if Ethereum is oil, then its long-term valuation profile may be flat, cyclical, and capped, not the explosive trade Lee envisions." On institutional adoption, Kang was scathing. Have large banks and other financial institutions bought Ethereum on their balance sheet yet? No. Have any of them announced plans to? Also no. His analogy drives the point home. Do banks stock up on barrels of gasoline because they continually pay for energy? No. Do banks buy stocks of asset custodians they use? No. From his perspective, the idea that banks will hold Ethereum as operating capital is a fundamental misunderstanding of how financial institutions work. Even on the technical side, where Lee leans heavily on charts, Kang was skeptical. Just because an asset had a parabolic rally previously does not mean it will continue to indefinitely. He argued that Ethereum's chart looks more like crude oil than an exponential growth asset. We are in a multi-year range. We recently tapped the top of the range, failing to break resistance. If anything, the technicals for Ethereum are bearish. I would not discount the possibility of a much longer $1,000 to $4,800 range. Ultimately, Kang concluded that Ethereum's valuation is inflated by narrative more than fundamentals. Ethereum's valuation comes primarily from financial illiteracy, which, to be fair, can create a decently large market cap. Look at XRP, but the valuation that can be derived from financial illiteracy is not infinite. In his view, unless Ethereum undergoes a major structural change, it is likely destined to indefinite underperformance. So where does that leave us? Cathie Wood believes Bitcoin's supremacy is baked into its design, scarce, secure, and neutral, forming the monetary base of a new digital economy. Tom Lee argues that Ethereum represents the greatest macro trade of the next 15 years, riding the wave of tokenization and AI. And Andrew Kang issues a sharp reality check, reminding investors that not all adoption translates to value, and that the market may be propping up Ethereum with more narrative than substance. The real question for investors is this: which thesis do you find more convincing? Is Ethereum truly the financial backbone of the future, capable of flipping Bitcoin, or will Bitcoin's simplicity and monetary purity guarantee its permanent dominance? Let us know your thoughts in the comments. Don't forget to hit like, subscribe, and turn on notifications so you don't miss our next deep dive. Thanks for watching, and we'll see you in the next one.